On All About Stocks this week, optimism prevails on Dalal Street post-exit polls. We'll tell you what your investment strategy should be. Power stocks in focus this week as Power Grid FPO renews investor interest in the sector. We'll give you the best bets in the space. And Sharmila Joshi gives you two stocks you can bet on for the long term. Welcome to All About Stocks. This is a show specifically meant for long-term retail investors. Now, there's been some reason to cheer. The Nifty scaled 6,300 this week, but there's also reason to be cautious. Over the next few months, we might see some volatility due to upcoming elections. And of course, we're all watching the US to see the Fed and when it's going to plant a taper, its QE as well. Now, over the next half hour, we'll tell you what your investment strategy should be for the next few months so you can make the best possible returns in the long term. Remember, our email ID is at the bottom of your screen, and you can send in any question you have about the markets or about your stocks. Before we go any further, let me bring in Ajay to give us an update on how the markets performed this week. Ajay.
Well, fair market this week seemed to have been on the stronger side, in fact gaining about 1.5% on key indices this week. A couple of factors buoying the market and improving sentiment. Better than expected macro data to start off with. At the start of the week, brought traders, long-only traders, back to the market. Apart from that, the exit polls and how some of the influential brokerages like CLSA, BofA and UBS have read the exit polls seem to be suggesting that the market likes the possibility of BJP in a leadership position in most of the states which have gone to poll so far. However, most of the traders also say that it's the cyclicals which are favoring the market. Banks, capital goods, etc. are the key sectors which are providing leg to the the market right now. And going forward, it's the actual outcome of the state elections along with non-farm payrolls data which will determine whether there's a case for a taper in December or not, are the two factors which will really provide direction to the market from here on.
All right, Ajay, thank you for that update. Joining us today, Sharmila Joshi, who's been advising us now for nearly 3 years. Sharmila, thank you for coming in. Like Ajay was telling us, we've seen a rally in reaction to those exit polls so far. Now, for long-term investors, if we look at the next 6 months, there are two things to watch out for. One is the US markets, and the other is the general elections. Let's start with the US markets first. What should we be watching out for, and what should that tell us about our markets?
I think, for the US markets, the concern has been really the fact that data points there are better. So, just yesterday we had a GDP number that was better than expected. It came at 3.6 versus 3, which was expected. So clearly their economy is growing faster than what they had expected, and the non-farm roll data will kind of sort of set the tone for the market in the next month or so, because a lot of people, if that number is good, then a lot of people will decide how soon the QE tapering is going to start. And I think, even if it doesn't start till, whatever date they had indicated, the fact that it could sort of play on people's mind, and that could turn the flow against you, which so far has been, it's come down a little, but it's so far been positive.
So whenever the American government decides or makes some sort of announcement about the tapering, we can expect to see our markets correct a little bit? Is that what you're saying?
Absolutely, because I think that a large part of the reason why markets have gone up in the recent past has been that we've seen a very good flow of liquidity from the FI front. Nothing has changed really on the domestic front in terms of economic indicators. Yes, I think in the quarter numbers you did see some shoots in the sense that some results were better than anticipated, which isn't really saying much, but they were better. But all of us somewhere acknowledge the fact that we have a big election coming up, maybe 6-7 months down the line, and nothing really, major is going to change until that election is out of the way, and we have a clear picture in front of us as to who's going to form the next government and what their policies are going to be, and so on and so forth. So the big trigger has come in the kind of FI flows that you've got. So undoubtedly, when you hear of when the tapering does actually start, whether it is December, whether it's February, March, whenever it does start, you will see some kind of a reaction in the market. But the moot point will be at what level will Nifty be at that point in time. So, I mean, it's another thing to say, yes, markets will correct from a 6,000 level Nifty, and another thing to say that markets will correct from a 6,500 level Nifty. So, we don't know where markets will go in this interim 3-4 months, where the flows will take it, which is why I think people at this point in time choose to be a little bit on the long side rather than, short the market or be very negative on the market. And, that is that optimism that you're seeing that is really playing out in the market.
I also want to talk to you about Monday morning now. Ajay was just telling us that we saw the markets react over Thursday and Friday, depending on exit polls that we saw come out of the states that were voting. Would you say that outcome has already been priced in now at some level, or there are some views that expect some sort of massive gap up opening on Monday morning? Which one do you think it will be?
See, two things. One is that how the US data plays out. I think that will play an important point, because that will set the tone for global markets. And yes, I think even in terms of the assembly election results, a lot of times exit polls have been wrong, very honestly. And even the exit polls indicate anywhere between 3 out of 5 to 4 out of 5. I think if you get anything out of more than 3 out of 5, markets will react positively to that, because that almost indicates a clean sweep, in that sense. And a market has been sort of building in this positive kind of flow for a Narendra Modi-led BJP government at the center. So this will be like a semi-final played out, and 2-3 important states are going, they'll have their results. Important from the perspective of the number of seats they will have in Lok Sabha. So from that perspective, this election result will be important. But I think 3 out of 5 is sort of in the price. If it is anything more than 3 out of 5, then yes, maybe there could be a possible.
In case we do see a 3 out of 5, in case we do see a gap up on Monday morning, how should we react as retail investors?
If the US data is weak, which kind of indicates that the tapering will, that there will be no stopping the tapering, then I think you have to play on the positive side, irrespective of the state assembly election. I think that's the major factor to decide market direction in December.
What should be our strategy at this point? What sectors should we focus on, and how should we approach this market?
I think if you have a market that's going up, then clearly the flavor seems to be a little more risk. So there could be, so you will keep changing focus. So you will see sometimes sectors which are more risky, like we've seen power sector move up in this last month, because you've seen a lot of brokerages suddenly saying that power projects could get cleared, etc., etc. So, you've seen some buying there. We've been seeing a consistent buying coming in metals. So that would be a sector, in fact, that I would like, because there I think data is changing in the world. So, that will play out positively. So I think metals could be one sector. I think IT won't go out of fashion, whether we like it or not. You will have some amount of buying coming into defenses like a pharma or an FMCG. So I think a better strategy would be to be stock specific. And I think in the mid caps, look at stocks where you expect numbers to be better, where you have an indication in this quarter that the company has done reasonably well, and they're going to build on that and do better in the next year. And that's perhaps where you could make more returns than just blindly playing any sector.
Well, we talked about IT, pharma, FMCG. We already know what your calls are on that. In terms of metals, is that a Tata Steel or a JSW? Where are you focusing?
Tata Steel certainly, I think, because that fits in with the logic that I'm using, that you are seeing better numbers coming from Europe. And so I think, yes, Tata Steel certainly, and I think maybe Hindalco, because I think Hindalco, again, people are kind of neglecting or overlooking the fact that Novelis has been cash positive for the company. And they have a huge expansion plan, and a lot of that expansion plan will also get funded because of the kind of cash flow that Novelis is generating. So I think Hindalco could be another stock.
Now, while we were talking about the power sector, we have a question from Rajiv, who has 100 shares of Power Grid, which he bought at 116 rupees. He wants to know if he should hold on to that stock. The stock ended the week at 98 rupees. We saw really strong response for the FPO. In fact, it suggested that there might be an appetite for power in our market right now. Let me bring in my colleague Ajay, who will give us an update on everything that's happening in the power sector and why it's been in the news over the last week. Ajay.
But power stocks caught the traders' fancy this week, thanks to the Power Grid FPO, which also has seen quite strong response from the institutional bidders. The index has gained around 5% this week. But apart from Power Grid, stocks like Tata Power, CSC, Torrent Power were the ones which were really catching traders' fancy this week. We also hear about a couple of block deals which have been done by select funds in this sector, which was underperforming the market so far. Some say that this is undervalued sector and very underowned right now, and the prospects from here on look better. So valuation case was one of the reasons why traders have chosen to get into this particular area. But of course, Power Grid is one stock which most of the brokerages note suggest is attractive at current valuations and can see reasonable amount of uptick going forward.
All right, Ajay, thank you for that update. Shabila, Power Grid, strong response for someone who's holding the stock. What's your advice?
I think continue to hold. The response to the FPO has been strong, and maybe it could trade in a little bit of a range for a while. But I think that 100, 108 kind of level is a very achievable level for Power Grid. So I don't really see any reason why you should sell off below 100 rupees. So I'm fairly comfortable with Power Grid at this price.
We have a question from Manokamna Chawla, who's written in 300 shares of Tata Power bought at 112 rupees. Should she hold on to that stock? Tata Power ended the week at 88 rupees. What's your call on Tata Power?
2-3 positive things are happening. You're hearing of some new projects, UMPP projects coming up. You're hearing of some tariff hikes. So I think all these things will play out in favor of Tata Power. Again, this is a stock that trades in a range. You don't normally see it. Last couple of years, you've seen it trade in this 70 to 110 kind of range, and you're somewhere in the middle just now. So I think you will see it rally till about 100, 105 kind of levels, and perhaps that's the level that you should really revisit the stock and decide whether you want to keep it or not. But for now, I think keep it.
For any of our viewers who don't have power in their portfolio right now, if they want to add a stock, do you advise it at these levels? And which of these stocks would you prefer?
I think Tata Power, but I think at lower levels.
At lower levels. All right, Tata Power at lower levels. It's time for a very quick break, but stay with us. When we come back, Sharmila will talk about 2 stocks that you can buy right now for returns in the long term. Don't go anywhere. Welcome back. You're watching All About Stocks on ET now. Sharmila Joshi is still with us, helping us figure out our long-term strategy for our stocks. In fact, Sharmila has brought in 2 stocks for us that we can invest in for the long term. The first of the 2 recommendations is the Tata Motors DVR. It ended the week at 202 rupees. Now, we've had softer auto numbers for November, but setting that aside, I first want to ask you, why the DVR and not the stock, not the regular stock?
Yes, I think it is related because definitely I've kind of recommended a buy only after seeing Tata Motors last quarter numbers, and I think that post those numbers and the kind of performance that we had from JLR Land Rover, the stock deserved an upgrade, and you would have a buy on it, maybe to levels of 440 thereabouts in the for Tata Motors. But I think for retail clients, it makes a lot more sense to buy the DVR simply because you just miss out on the voting rights and you actually get additional 5% dividend. Plus, there was an FI limit on how much DVR could be owned. That's been moved up. So FIs are also going to buy Tata Motor DVR because simply, of the discount that exists between Tata Motor DVR and Tata Motors, and that will help that discount to close a little. So if you look at it from all angles, it makes a lot more sense to buy the DVR. Yeah. Yes, it makes a lot more sense to buy the DVR than the actual Tata Motor shares.
All right, so then take us through why Tata Motors DVR at this point in terms of the stock. What do you expect it to do? What your targets are?
So I have a target of 240 on the stock, and largely, as I said, because I like the numbers that you got from Tata Motors, and Tata Motors has clearly become a global story now. It's the revenues from Land Rover, Jaguar that are driving it, and we've seen very good numbers from there, and they've got a lot more models that they're introducing. They're also working on a strategy overseas where they're trying to rationalize costs because they've really studied the way the Audis, etc. of the world are operating, and they're kind of doing a lot of restructuring of cost, and that is going to show in the margins there, and they had fairly good margins there, and they're likely to maintain those margins. So that's, I think, fabulous as far as the JLR business goes. And coming to the local business, I think, domestic business, I think there is some hope that maybe things will, like this is bottom that you're seeing, and that, maybe next year things could be a little better. Or if not better, I think they'll stay at kind of the same level. So I think based on that and giving it an upgrade from the kind of earnings that they're getting from their overseas business, I would give Tata Motors a target price of about in the range of 440, 450. And which is why I think the DVR can easily go up to about a 240 kind of a price.
All right. And I also want to ask you, it's nearly at a year high at this point. Should we be buying at this level? Would you like us to wait for a correction of some sort?
Definitely, I think it makes a lot more sense to buy it on dips. So I think on Monday, if you see markets correcting, then wait it out and try and buy it lower. I think 170 is a perfect kind of a price to enter Tata Motor DVR. So if you get a chance to enter at 170, nothing like it. But the target is 240, so even at 200, it's not a bad price to enter.
All right, so Tata Motors DVR, that's the first recommendation. The second recommendation is Jyoti Labs. We're going to pull that stock up. It ended the week at 197. Tell us why Jyoti Labs and what your targets are.
Actually, both these stocks I picked up after seeing their quarter numbers. I think if you look at Jyoti Laboratories numbers, you'll find, this is a company that was going through all kinds of restructuring issues in this last year. Ever since their buyout of Henkel, etc., they went through this whole couple of quarters where things were not so good for the company. But you have a new management in place and they have taken certain measures and things are looking better. So they said that they do EBITDA margins of 15% and they've been doing that for the last couple of quarters. And what I liked about, whatever I read and whatever I saw was that the management is fairly upbeat and fairly aggressive when it comes to future growth. So they're saying we'll maintain margins at 15, but anything that's more than that, whatever extra top line or profit that we are generating, we'll try and spend it on better branding or buying out another brand. Recently, last week, they said that they've raised some money and they could be looking at an acquisition. So I like the fact that the management is taking on a very aggressive path to growth, and they've said that they'll deliver this year on the numbers. And I think if they have a buyout, then it would be interesting to see what it would be. Some of the brands are already, good brands like an Ujala or a Henkel, but they're trying to get a more pan-India presence for their brands because I think in the south they have a fairly good presence, but perhaps not so much in the north and the east. So they're looking at doing all those things. So I think in all things put together, some of their measures that they've taken in place are showing, they're showing results, and I think they will only grow to greater strengths from here.
Is the stock a little expensive at this point?
It has run up. I think in this last week it has run up. So once again, I think if you get it on dips, it's good. But
what would be an ideal level to buy it at?
Maybe closer to 170 again, if you get a chance.
If you get a chance. And what are your targets on the stock?
Yeah, my target is about 220.
All right, 220. Two recommendations from Sharmila: Tata Motors, DVR and Jyoti Labs. Remember, every time she comes back into the studio, we're going to take a look at how these recommendations are performing. But right now, it's time for us to answer a few questions. Vishal has written in, he has 10 shares of Maruti, which he bought at 11.10. He wants to know if he should hold on to that stock. He's making a nice profit. Maruti ended the week at 17.1. 10% declines in sales in November. Actually, for mostly the auto pack, but we must grant them the fact that there was a festive season base effect in October. But if you look at the entire auto pack, Maruti included, what are you seeing right now in terms of value?
Perhaps the best pick in the choice is Maruti, given the fact the kind of numbers that everybody has delivered. So, but I think precisely as you said, because he's sitting on so much profit, he might want to take it off the table. But otherwise, I think it's a stock that he can hold on to, because I really wouldn't know what to sell it and buy in place of that, at least in the auto basket. So since he's bought it at a good price, maybe he can keep a price a little, like, if you start seeing it correct below 1600 or something, then just sell it off. But otherwise, I think, he can ride this one, because yes, these things happen with numbers, especially around festive time. We see it, it's a yearly phenomena. We see it a year after year. So I wouldn't get too worried by that.
You have M&M in your portfolio right now. In terms of, comparison between Maruti and M&M and where you see the potential, where would that be?
I obviously prefer M&M as a story, simply because they also have that farm business bit in it. And we've seen that bit actually start doing better. Like we've seen where it has taken Escorts, for instance. Mm-hmm. So, that's another stock that I've liked at that 70-80 kind of level. And of course, now it's run away to 130 kind of levels. But so coming back to M&M, I think that I think for them the only weak bit in their portfolio has been the electric cars, and that's a little unfortunate, because they don't get any they've not got any discounts there, like which they used to earlier. So I think other than that, their portfolio is fairly strong, and but I think the reason why Maruti does better in terms of why it gets a better valuation is the fact that it's in passenger cars, and M&M has a more mixed portfolio. But from a longer term perspective, I think certainly Mahindra & Mahindra is also a very strong play.
All right. TVS, Hero MotoCorp or Bajaj?
I think possibly Bajaj at this point in time.
Why is that?
Because I think Hero Motor, all said and done, has lost a little bit of market share. And TVS is actually that we are distant third in terms of numbers, etc. So, whether you're talking of margins, whether you're talking of sales, I think Bajaj Auto has kind of held its own better. And also they have that share in KTM, KTM bikes, and that has been also doing very well for them. In fact, they're thinking of increasing their capacity in Chakan as well as, overseas, etc. So that could also play out in their favor, going ahead, given the fact that, that way KTM has a very nice portfolio. and possibly an kind of explored market from an Indian perspective, because it's, it fits very nicely in a very aspirational bracket for young people. So I think that could do well for them going ahead.
After we come back, we'll review Sharmila's own portfolio. We'll discuss stocks like BHEL and L&T. Don't go anywhere. Welcome back. You're watching All About Stocks on ET Now. Thank you for staying with us. Sharmila Joshi is still with us in the studio, helping us make money in the long term. Now, Sharmila designed a portfolio on this show, and it was designed on the 21st of December last year, so it's about a year old nearly. It's currently at an overall loss of 8.86%. Now, let's compare it to the Nifty over the same period. The Nifty is up 7%. I'm going to give you a recap of the stocks she picked in this portfolio, and then we'll ask her what she wants to do with it. There's L&T, Central Bank, Godrej Industries, ILNFS Transport, Ipca Labs, JSPL, Kajaria Ceramic, M&M, and SBI. Well, Sharmila, the portfolio is nearly a year old now. Some of the stocks are doing really well. There are still some disappointments, but it has, like you predicted, recovered since the last time we spoke. Do you still have faith in this list of names? Do you want to hold on to them?
Yes, I think essentially they're good stocks. I think some of the banking results, etc., may have been weak, which is why Central Bank is perhaps more down than it should have been. Also, State Bank is a bit of a disappointment, given the fact that they did okay really in this last quarter. So numbers are beginning to look okay. I think that that's a bit of a disappointment that that's down 20%. But it's still not a bank that I don't know what to sell it and buy in place of that, unless I mean, you're always wise in retrospect. So maybe I should have bought a private bank in place of SBI. But otherwise, I think most of these sectors are sectors that I'd expect to do better going ahead. So I would like to stick with this.
I'm going to give you a recap of the stocks in this portfolio. L&T, Central Bank, Godrej Industries, ILNFS Transport, Ipca Labs, JSPL, Kajaria Ceramic, M&M, and SBI. And that brings us to the end of All About Stocks for this week. Sharmila, thank you so much for spending time with us this weekend. If you have questions for Sharmila about that portfolio, or about anything else she recommended on the show, feel free to write to us. Our email ID is at the bottom of your screen. You can catch a copy of the show on our Facebook page, and you can reach me personally on Twitter. Thanks so much for watching.